The forex market never sleeps, and neither do I. So let's go and see what today's charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel, and I will see you on the charts. In today's video, I want to speak about NZD USD. Now, why do I want to speak about NZD USD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can notice is that at the moment here on the monthly, the market has just tested a very strong level of previous monthly support and demand here, which the market then broke to the downside. And at that point, all this previous support was turned resistance here. So here on the monthly, we're testing and rejecting previous support and resistance quite aggressively to the downside. Dropping down on the weekly time frame, what do we have? Now here on the weekly time frame, we have a little bit different scenario. In fact, we can notice how in creating this move to the downside, the market has actually printed in M pattern. We see the move to the upside started from here, down, up, down. And in general, after the creation of an M pattern, what you expect is the market to provide and create a move to the upside to go and complete the pattern at the previous support and resistance before then getting a potential rejection lower. So here in the weekly, we expect short-term bullish price action before then longer-term continuation to the downside. So a completion at this previous support here, now turn resistance, and then a rejection lower. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what do we see? Now here in the daily time frame, we can see a very strong impulse to the downside. In general, after the creation of an impulse, what we expect is the market to start a correction. And then after the correction, that is supposed to be at least at the 0.32 of the Fibonacci taken on the daily impulse. So from this high to this low, at that point, what we expect is a deceleration and the continuation to the downside for the completion of this impulse correction and impulse pattern to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, and we check the data specifically for the NZD, what we can see is that lately on the NZD, net positions have been dropping quite aggressively. We went from having 13.9k net positions with 26.3k longs and only 12k shorts, all the way down to having a negative minus 8.3k net positions with 19.9k shorts and only 11.6k longs. So the NZD USD has been getting quite bearish. So what we can expect is if the market will actually provide a correction, possibly to this previous support and resistance, and at least to the 0.32 of the Fibonacci taken on this daily impulse, we can then expect more continuation to the downside, since anyway, also from an institutional perspective, as we can see here, we are starting to get quite bearish. So if the market will provide the correction that we want to see with students, how we will be approaching this potential shorting opportunity. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective instead of this area waiting for the market to shift from an intraday bullish market as we will have to an intraday bearish market. And if the market will shift from an intraday bullish to bearish bearish market and provide to us one of our valid entries. At that point, we would be looking for this potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and for the market to provide and create a potential lower low. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description and I will see you in it.